Nation. It's your host, Avi Golhar. Welcome to the Think Realty podcast. One of my favorite guests of all time on the show today. His name's Aaron Norris with Property Radar. We're talking about tech. We're talking about, I'll tell you what we're talking about as soon as I can pull it up. Sorry, Aaron, you have to give me a second. Is 2021 going to see a wave of foreclosures? Number 2, what kind of off-market opportunities exist in the market today? Number 3, what competition does the Main Street face in 2021 from Wall Street? So before we get to Aaron, though, I need to give a huge shout out to the entire Think Realty family, including myself, because it's just really an excuse to give a shout out to myself and my beautiful looking self. But really, the show is brought to you by the Think Realty Hybrid Conference and Expo. Stop laughing. The Think Realty Hybrid Conference and Expo in Houston, March 26th to the 27th. Set your sights on making 2021 a success with more knowledge and know-how by learning and networking with top-tier real estate investing professionals. For a limited time, and I really mean a limited time, receive a buy one, get one free deal on both live and virtual tickets. You can register for 2 tickets and enter the code podcast to check out to receive the special pricing. Visit thinkrealty.com/Houston for more information. Enter stage left. Aaron Norris with Property Radar. Every time, man, I cannot start the show without laughing, and it's great. We talked about the eyelash thing. It doesn't matter, right? Like, we don't have to talk about the wave of foreclosures, off-market opportunities, and Main Street competition. I need to talk about eyelashes and how is it that we have this like non-competition competition going on, and every single time I fail. I just don't understand it, Aaron.
I was not aware of this competition, but I'm happy to win anything I can.
Okay. Well, I'll make sure you get a trophy the next time I see you. Okay, Aaron, give us a little intro. For those of you that don't know Aaron, enter Aaron.
Sure. Aaron Norris, Property Radar, Vice President of Market Insights. I spend a lot of time working with media pulling data for stories that they're working on, and I train nationally on where real estate agents, real estate investors, mortgage professionals, even home services find opportunity in off-market using public records.
Awesome. And 2020 was an interesting year. 2021 is proving to be an interesting year. You were on the podcast, I think, in January or late last year, and we had a couple of trends that you were thinking about 2021. Are some of those true? Have any of your ideas changed about this year compared to the last time we talked, which is maybe 2 or 3 months ago?
We talked a little bit about iBuyers, I believe.
Yep.
And I know you and I talked just a skosh on 3D printing. I think those things are just going to be hotter than ever. We've got major real estate brands. If you're not familiar with what iBuyers are, these are Wall Street backed prop tech companies that buy cash as is in many of the hottest markets in the country. We know now that Realogy, Keller Williams, other real estate brands are stepping into the fray, launching their own version of this. And then you've got companies like Zavvy. I just did an interview with them a couple weeks ago where they're offering any brokerage if they don't have their own in-house iBuying tool to be able to do that. Now, yes, you're thinking, okay, as is all cash, agents have always had that option if they connected with a local realtor. You are correct. But the nuance here is that they're really focusing now that the competition is getting really hot, and you've got, let's name them really quick. You've got Redfin, Zillow, OfferPad, Open Door, and Knock are sort of the top 5. And these are not sort of the home investors. They're not going after the ugly ones. I sort of call it the we buy easy houses. More and more as they focus in on these hot markets, they're looking to churn and burn. It's not unusual for me to see them now in California buy something and be out of it within a couple months. Now, they shut off the spigot when COVID first started, but they have come back and they are revving up. So they're going to be a trend. Mm-hmm.
They're absolutely gunning for it. I've got a few folks over at Realogy and Redfin, and it has just been they are just deploying as much as they can right now. It is insane.
Yes, and you've also got, keep in mind, another little bit of competition that's going to enter the foray is Wall Street institutional buyers, that they raised a lot of money thinking they were probably going to buy a lot of distressed inventory. However, that doesn't look like it's going to be the case. So expect some of these iBuyers to spend even more money driving up your rates in marketing, especially the digital ads, and you'll be paying a lot for keywords that even your own branded keywords, unfortunately. And they're going to probably buy directly from iBuyers. So American Homes for Rent, Tricon, Progressive Homes, Cerberus. It's already been happening for several years. They've been buying a decent portion of the iBuyer buys in some of these hot markets like Phoenix.
So I guess that's question number 3. What competition does Main Street face in 2021 from Wall Street? I guess let's start with that one. How do we adjust to what you just mentioned, right? Like my Google SEO costs are going to go up. Do I have to write 1,500 word articles and blogs on my site every day to keep in front of these guys?
That's a strategy, and you really have to decide. And one of the things you can do is really, now keep in mind, a lot of this happens off market. You never see the buy and sell transaction side from the iBuyers. I've got real estate investors who specialize in wholesaling to them. These iBuyers are not tackling property and people problems. So if you've got a probate or a situation with title, they're not going to go after that. They're going to go for the really easy ones that they can turn and burn. Real estate investors that understand the buy box at the local level can end up flipping to these iBuyers if they're savvy and understand what the numbers that they're looking for.
So who's best positioned to take advantage of that? Would it be your real estate agents and realtors, or is it your first-time real estate wholesaler that's not done a deal? Maybe it's a real estate wholesaler that's done a couple deals. Maybe it's a flipper. Who do you think is best positioned? All of the above?
All of the above, oddly enough. Yeah. So if you're an agent, if you're in a market with the iBuyers and you show up to a potential seller and you're not giving them those offers and they get a mailer later, well, shame on you. How much more powerful as an agent is it if you come to the table saying, hey, here are all your options, knowing that, hey, listen, they're probably not going to accept your house because maybe it's 5,000 square feet in Orange County and they're really focused on a lower square footage. By you having that local buy box knowledge, you come to the table to your potential seller way more savvy and you actually earn your 3% commission. Now, wholesalers and real estate investors, like I said, if you can understand the buy box and decide, hey, you know what, maybe I got a few more than I was expecting. I can't do all of these on my own. And I know some of these Wall Street companies, if I dejunk it, they'll give me a really good price. I may not have to barely fix it at all. Turn and burn. Get it out of there.
That makes sense. And I think a lot of these real estate agents that are wondering, well, how do I make that cash, that little extra? This is a fantastic way to do it. Look in your own backyard. You've got these iBuyers that are willing to put down some money on properties that, frankly, you can run into doing open houses, which is kind of interesting. So are they only going after properties in primary markets, or have they expanded to secondary, tertiary markets? Should I be looking at rural Arizona next to Area 51 to buy plots of land?
No, and it's a really good question. Right now, no, they are definitely focused on major MSA. So several markets in Florida, Phoenix, North Carolina. I pulled some up in Tennessee, California. And an example here in California, some iBuyers are not in all markets. So in Sacramento, for instance, you've got Open Door and Zillow, where in my market, Inland Empire, we had 4, but OfferPad disappeared about a year ago. So it changes. You just got to keep your eye out on what's going on.
Well, the real reason they're not in Sacramento, let's be honest, is because your basketball team is just trash. Okay, so
shade.
total shade. I'm a Pistons guy. It's not like we're any better. Like Pistons, Lions, Tigers, we just Red Wings. Like who pays it? Nobody cares about Michigan. All right, off-market opportunities. What should I be looking for? Should I be looking for tiny houses, build to rent, like? Just buy and hold vacant land when looking at off-market? What's the strategy?
You know what I think the strategy is whatever you are passionate about and you can own. The biggest mistakes I see are real estate investors who show up on Bigger Pockets or get lost in articles at Think Realty. They go to their local investment clubs for a year and they get introduced to 12 strategies and they just get lost and they never pull the trigger. It's okay for you to bring you to the business. So at Property Radar, we talk about chocolate versus peanut butter. If you can define that chocolate, what you bring to the business, what makes you so special to back into a niche, I'll find you the data or the peanut butter. So when the chocolate and peanut butter combine, it's amazing. And I'll give you a great example. If you're an introvert with no time, no money, no experience, and I start talking to you about door knocking, you're just going to die inside. So let's not do that. But if I start throwing strategies at you like lot splits with accessory dwelling units, let's see if we can upzone opportunity zones where maybe you can put together and coordinate a transaction. You don't even necessarily need to buy it yourself. You see what I mean? It's just how can we fit your personality and your passions and skill sets into a strategy? Because there are a lot in this business.
So let's talk about the real estate investing meeting technology for a second. Property Radar has done incredible work in this space for many years, being ahead of the curve with data and understanding where opportunities exist. Off-market opportunities exist for real estate investors that are in a really competitive market. You're looking at getting an edge, and you're like, I just don't want to compete anymore, because at some point in time, if you go to the steps, if you go to the courthouse steps and you see 400 people there in the midst of a COVID environment, you're like, you might as well just turn around, go to your nearest bar and start drinking, because that's kind of what I feel like doing at that point in time. Or growing my eyelashes out. I don't know which one. Maybe one follows the other. I'm not entirely sure. So propertyradar.com really helps real estate investors how and why.
Well, it's got property, people, and mortgage data, so you can mix and match over 200 fields to create a very hyper localized defined niche, which is really cool. So when I teach, one of the things I do is I cover three different kinds of buying strategies: equity owners, absentee owners, and value add, and sort of what the data profile could look like. So let's take the absentee. Absentee, you can go to your title company, probably get it for free, a mailing list, right? Okay, well, what if they bought that the last year? Is there a likelihood that they're going to do it? How can we get more savvy? Okay, how about we start layering on demographic data? Let's say I want to go to Nashville. I want to look at absentee owners who have owned for over 25 years. Maybe they've taken all the depreciation. They're over the age of 65. Maybe they'd be willing to talk to me about some creative finance kind of deals, owner carry. I don't know. If they've taken all the depreciation, maybe they just want to check and they just don't want to deal with tenants, toilets, and trash. So by looking at that kind of data the last time it was transferred and the demographic data, the age of the owner, all of a sudden I can talk to 100 people for the next 3 years, hyper targeted, and leave all the other ones on the table and let everybody else waste their marketing money. See what I mean?
I like that. Right. Just waste your marketing money on the crap that doesn't matter, because I'm going to focus my efforts over here. Very much zigging and zagging.
And as a marketer, my job is trying as best as possible to do right bound marketing, right audience, right time, right channel, right message. If I'm able to, am I going to talk to an absentee owner, a professional landlord, the same way I would an equity owner? Probably not. So my mailing might change. Maybe I'm not going to send a yellow letter to an absentee landlord. They might laugh at me. Maybe they want to see a little bit more corporate. I don't know. Every market is different. The channels that you advertise may be very different. Maybe your local paper or your local church missile, I don't know, is very popular with real estate investors. That's what makes a hyper professional, hyper localized professional so awesome, is they understand how to talk to the people in their local markets better than Wall Street ever will.
How do you know if somebody's going to do something or when they're going to do something? Example, if you have a group of people in, say, a secondary market in wherever, USA, and you use the 200 fields from propertyradar.com to isolate this group of people and to market to these people, is there a way to identify what their behavior could be in 60 or 90 days? And if so, what does that look like? And how do I achieve that result in getting to them before they put their property on the MLS? Do you kind of see what I'm saying? I want to understand what their intent would be before they do it, because then I put myself in a position to win.
You're sort of skirting around like the machine learning and artificial intelligence language. So
Yeah.
there is a way to do it. It's not perfect. Anybody who says that they've got a perfect system is probably selling you something, which is fine.
Right.
The way that we do it at Property Radar is you create a list at a little bit of a higher level. So let's go back to that absentee owner list. Let's go back to Nashville and say, hey, you know what? I want to talk to properties in this market, absentee owners that have owned for over 15 years, say, and it pulls maybe a list of 500 to 1,000 in this area that I've pulled. We have an area of the software called Insights, to where it gives me property and people statistics separate. And what's cool about that is I can say, hey, on average, these properties churn every 17 years. So I can sort of get a sense of what the trends will be based on that, and then start digging in and refining it. So I go from 500 to 1,000 to 100, and I just keep refining and see if that works. So it's much easier to test at 100 than it is, 1,000. Now, keep in mind, I said right bound includes right channel. Direct mail, the nice thing about direct mail, people think it's old, but it still really works. And if it's the message is right and you're hyper targeting, you get to do that in several different ways. And it's the same cost whether you're Wall Street or Main Street, which is really cool. Digital ads are getting more expensive. I'll give you an example. A Sacramento investor I know, when COVID first happened, Open Door was up there, and so is Zillow. As soon as COVID happened, they backed way off. They stopped marketing in Sacramento, and her cost per click on her branded names, as well as key terms for real estate investors, went down substantially. When they came back, her branded name key terms went up 3 times. So it gets, they're
That's
going to raise your prices. It's
crazy.
brutal.
That's crazy. Unless you're Aaron Norris, in which case you just grow a beard, you throw yourself on a poster board, and everybody calls you, and you get a million hits on your website. Okay. So is
I try.
2021 going to see a wave of foreclosures? Everybody was talking about this last year. It's kind of interesting. I mean, on the one side, you're like, yeah, they can't pay their mortgage, and now all of a sudden banks are going to foreclose, but at the same time, they have a whole lot of equity in their homes, and they could just sell. So what side of the equation are you on, and why?
Inside circuit. If you're lining up for a whole bunch of distressed inventory, I think you might be wasting your time. Line up for it, be prepared, but I think you may be severely disappointed. It doesn't matter what kind of side of the party line you're on. Right now, the government just doesn't seem to be that interested in a wave of national foreclosures due to a global pandemic. You've got states like New York and California continuing to push the eviction moratorium off till June. I was talking to the owner of the Long Island RIA out there, and she has one that stopped paying in February of 2020. And because they've extended the extension of the moratorium extension through June, they're going to be way backed up. The chances of her getting the tenant out is next to none. And it's over 60 grand that she'll be owed by the time that they get out. She's offered this tenant $30,000, and the tenant said no. So I think government programs are going to somehow try to fill the gap. Will there be some? Great. But think about it. If you bought a property in January of 2020, how much equity are you sitting on? Quite a bit.
Yeah.
Foreclosures are hard when you're not upside down. Short sales are hard when you're not upside down. It's just called a sale. So death, disease, and divorce always happens. People might not get what they want. Could prices soften a little bit? Absolutely. Should we get spoiled and think, when your barber starts becoming a real estate investor, should you get nervous? Yeah, probably. And we shouldn't get spoiled and think that we're going to get a surprise 30,000 extra in a flip all the time. So just be careful. Distress may come from people that don't have enough equity to do a standard sale, and they need to get creative. They're going to be that kind of distress, but will it turn into a huge wave of foreclosures? Probably not. Isolated markets, maybe. Commercial versus residential, very different story. So I think commercial could have some issues. And I definitely see some interesting language on the legislative side of Main Street versus Wall Street. They seem a lot more intent on helping Main Street than Wall Street.
I like it. So if I'm a landlord, I own maybe 30 rental properties, and I can't kick out my tenants, I would be somebody that would be great to market to potentially buy, because
if you've got the bandwidth to step into the same problem, because just because you take over means it's your problem now. So that $60,000 behind tenant, yes, she may give you a great discount, but you're going to be stepping into her place and be holding on for a year until you can get through the eviction process. So know what you're stepping into for sure.
Got it. Unless that's an iBuyer situation, right? Like maybe that's a iBuyer play. Hey, let me.
Oh no,
no.
iBuyers won't touch people problems at all.
Not
so
at all.
No, Wall Street might. You are correct. Wall Street might have the bandwidth with have to spend money. That's interesting. They may indeed go after that kind of stuff for sure.
Right, because like if they're so if they're raising a bunch of money at like 0%, then in my mind's eye, and I could be completely wrong about this. And then I have one last question for you, and then I know you got to go because you're super busy. In my mind's eye, Wall Street will say, we raised a bunch of capital, we need to deploy it, it's an asset play. I don't care if I have a whole lot of cash coming in because I can hold on for 2 years while the powers that be move things around. So even though the iBuyers won't necessarily do that, maybe Wall Street can, and that would be interesting.
I see three buckets. I think
Okay.
they're going to trustee sales really hard. And
Yep.
some states, because of the foreclosure stuff, like California, just instituted a really strange redemption period where it's weird out here to even do it. So I think there's three categories to watch Wall Street on: distressed debt, build to rent, and the iBuyers. I think is where they're probably going to find some interesting opportunity. Build to rent will be a little bit tricky because of supply chain disruptions. I build in Florida personally, so I've witnessed that firsthand. Lots of cost overruns and timing issues right now.
Got it. Last question. It's funny. The segment that I'm doing right after this is the top housing markets of 2021. Guess what's number one? Sacramento. So I'm eating my words when it comes to that. So that's great. I was really hoping not to see Sacramento, but anyway, I didn't care. Okay, last question for two parts. Number one, I'm a new investor. What do I do? Do I start getting cash heavy, and do I smartly deploy my cash? Number two, I'm a pro investor, and do I? What advanced strategy would you use? I know you mentioned whatever strategy makes sense for you, but what are you doing right now? Should I be lending? Should I be buying and holding? Should I be doing what McNeilage does, more build-to-rent stuff? What's the idea?
Again, this is really a chocolate versus peanut butter conversation for
Who
me. Chocolate
said
is what you're
chocolate and peanut butter came like together anyway? You're alienating everybody that eats Oreos. Okay, like
right,
what
and
is
who's
going on?
allergic to chocolate? I'm sorry. Yeah, and you could be allergic to nuts. So this analogy may be completely lost
You
on
won't be
you.
able to fly on Delta, man. Like they're not going to let you on with a nut allergy. Like geez, they kick you off the plane.
For new and pro investors, I think you just have to know yourself. I tried to be a flipper for a long time, and it really stressed me out. And I learned I really love being a landlord. And over the last decade, I've switched to build to rent. I love owning brand new houses of rentals because I've been 1031 exchanging, getting rid of the stuff that's gone up a lot. Not all of it. I'm not getting rid of all my stuff in California, but personally, I've been going into Florida because I like new rentals, and it's a different kind of tenant that I'm attracting in the single family home space. This is a game that some people just can't get enough of. I just did an interview with Mike Cantu. He's been in the game for 40 years, and he's still flipping and wholesaling. He just loves the game. You do you, bring you to the table, and do what strategies get you excited about waking up in the morning. Nobody can tell you different. There's opportunity in every market. It's just up to you to find it.
Aaron, I appreciate your time. I guess maybe the last deep question that I have for you is those folks that migrate from Michigan to Florida, they're called snowbirds. If you migrate and
Yep.
invest from sunny California to sunny Florida, does that make you a sunbird?
I don't know, but I'll tell you this right now. You better change your license plate quick or lie and say you're Canadian or something, because they will chase you. I got told 3 times the last time I was down there, leave your California politics in California.
Right, in California. Get out of my state! Wow, sorry. That wasn't
Hey,
even me.
true story.
That kind of sounds like what I'd be yelled at for. Okay, that's all I got. Aaron, thanks a lot. This is always fun. It's always interesting to have you on.
Always good to see you. All right, buddy.
I'll see you. Thank you. This next segment is brought to you by Norada Real Estate Investments, your premier source for cash flow investment property. Visit www.noradarealestate.com. Realtor.com has the top housing markets for 2021, and as I mentioned just a few minutes ago, Sacramento is number one, coming in sales growth year over year. This year they're projecting to be 17.2%. San Jose, California is number 2. Charlotte, North Carolina is number 3. Boise City, Idaho is number 4. So if you like potatoes, head on over to Idaho. Number 5 is Seattle, Washington. Number 6, Phoenix, Arizona. Number 7, Harrisburg, Pennsylvania. Number 8, Thousand Oaks, California. Really, wine country. I mean, that makes sense, right? Like, so drink up, you Merlot lovers. Number 9, Denver, Colorado. And number 10, Riverside, California. And these sales growth year-over-year percentage increase numbers are ranging anywhere between 10 and 17%. 17% was the Sacramento number. And it's interesting. I'm kind of liking the Sacramento idea. So if you have some cash and if you want to invest, maybe head on over to Realtor.com, check out this article, and tell me what you think. But in this article, they also talk about The home to younger households, how that's starting to shift a little bit. Your millennials are starting to buy, and they've been really looking for that. On average, the top 10 markets have a larger share of younger households, age 25 to 34. Than the U.S. as a whole, 13.5%. So when you are in these markets, make sure that you know who you're building for, because those renovation dollars, you want to make sure they are absolutely on point for that demographic. 65-year-olds want something that's completely different than 35-year-olds and 26-year-olds. Okay, we got to run. So that being said, this was fun. I want to thank Aaron Norris for coming on from Property Radar. If you're looking for some really awesome insights, propertyradar.com is your website to go to. So definitely go check them out. Every real estate investor needs an edge. Propertyradar.com gives you that edge. The podcast today was sponsored by Think Realty. We want to see you in Houston, Texas. All right, so check it out. Think Realty Hybrid Conference and Expo in Houston from March 26th to the 27th. Set your sights on making 2021 a success with more knowledge and know-how by learning and networking with top-tier real estate investing pros. Right now, you can get a buy one get one ticket. Register for 2 tickets on thinkrealty.com/Houston and use the code podcast. Again, the code is podcast at checkout to receive this special pricing. That's a wrap. You want to get in touch? You know how to do it. Go to thinkrealty.com. You can find me anywhere online, specifically LinkedIn at Avi Golhar. And I'll see you next time.